Yeah, good morning, all of you. And I really thank ICAA for organizing this meeting. I remember the last time when I came for this meeting, it was November 2019. And after November 2019, again we are meeting here in this hall. I have attended many meetings in this hall, all organized by Gautam Da and his ICAA team. So it's a welcome departure from the COVID time when we were doing all the meetings over Zoom. COVID has changed many things for us. We have started attending the meetings on Zoom. Kids have started taking classes on Zoom. Even doctors are providing consultation on Zoom. Mutual fund industry has also seen many changes during this COVID time. I would like to emphasize upon two things which has changed during this COVID time. First of all, on March 2020, AUM of mutual fund industry was around 24 lakhs crores. And if we take the figure of November 2021, it's 37 lakhs crores. So it's a big jump for all of us. So coming back to my point, basically two things has happened. First, industry has moved from product selling to solution selling. Everybody is talking about retirement planning, child planning, how to prepay their EMI, how to plan for it. Earlier, people used to do SIP of 1,000, 2,000, 5,000. Now, all of us are making him plan for 25,000 of SIP, 50,000 of SIP. So industry is slowly moving towards the solution for which the industry is. And I must congratulate ICAA team under presidency of Gautam Da. He has helped many of its members to clear CFP exams. Now they are helping them clearing 10A, 10B. Why he is doing all these things? These things help us to understand the concept clearly so that we can present a good case study before the client. If somebody is approaching the client with a tagline like, सर एक म्यूचुअल फंड आप कर लीजिए, सर एक SIP कर लीजिए, तो be assured you are going to get SIP of 1,000 rupees only. If the same client is approached with a different tone, with a different perspective, I'm here to help you, just I'm quoting example, I'm here to help you send your child to US for higher education. So things will totally change. That's the same person who is going to give 1,000 of SIP to some Mr. X will give SIP of 25,000 rupees to the different distributor. So it's very important to upgrade ourselves, upskill ourselves. So this industry is moving towards solution selling. Second, very important, industry is fast moving towards adopting the technology. Isn't it? We all survived. For 2 months, we were completely sitting inside our house. Still, this industry survived. Its industry grew, in fact. At that time, market was quite patchy. There was no M2M impact on the AUM. Still, everybody's business went up. Why? Because we adopted the technology. People who had adopted the technology actually flourished during the COVID time. I just quote one example. Recently, we have seen a very successful SBI BAF fund. We got a collection of 15,000 with all your help. I must congratulate, thanks for all of you for your support. There are two learnings from this BAF. First, we got collection from 93% of PIN codes in India. 93% of PIN code in India. This shows the spread of mutual fund across length and breadth of India. And more than 50% of transaction came through digitally. So this has happened. Why it was successful? Because it was a solution, as previous speaker from LIC Mutual Fund, Journal Head of LIC Mutual Fund was emphasizing upon the balance fund. It is actually the need of the hour. So first solution was there. Second, ease of transaction was there. People were able to subscribe in our fund digitally. 50% of people. It's very important to move to adopt digital. Many apps are available, many websites are available which are helping us to do it digitally. We have got our SBI partner portal, we have got our SBI partner apps. Many people are using it. If you have not used it, please use it. It's a very user-friendly, very easy to operate it. I would like to also quote one example. SBI as a bank is the biggest distributor among all the banks. Are you aware? SBI is doing 75% of transaction digitally. 75% of transaction digitally. That's why today SBI as a distributor's AUM is around 80,000 crore. Physically, it would not have been possible for SBI to become such a big distributor. If SBI can adopt digitally across its 25,000 branches, why we cannot adopt? I will appeal everyone, please adopt digital. It's very easy to adopt digital. I am digitally aware, I know how to do my internet banking, how to do the transaction. But what about our investor? Government is helping us in many ways in making investor aware about the digital transaction. It is also our duty, it's also our work to help the investors, especially the aged one, to adopt digital technology. And it's a win-win situation. If we adopt the digital and our investor adopt the digital technology, then AUM is bound to grow. Today we are having 37 lakhs crores. I'm sure it will soon reach 100 lakhs of crore. Today, mutual fund industry is 37% of FD market, bank deposit market. And world trend shows that all developed countries are having more than 100% AUM in mutual fund. So very soon, India is going to have 1,50,000 crore of assets under mutual fund industry. We all need to upgrade ourselves, upgrade our knowledge base, start selling solutions, product, and go digitally. With this, I would like to thank all of you for attending this seminar. Please keep attending all those webinars, all those seminars, all those sessions. These have been designed by the team to help you us. Thank you.
I hope all of you are taking down notes. I'm taking down notes, lot of insights, sir. Thank you very much. It's a pre and post pandemic, a lot of changes has come on the industry, all sectors in learning, development, everything. And in the mutual fund industry, basically people who never thought of investing digitally are now doing it. And really the market is growing at a great speed. I hope we should not lag behind, so we should enhance our knowledge, and not only physically but also digitally, because business is also growing digitally more rather than physically. So people are adapting to the situation, so we should be changing, and the courses we are doing through our various channels, the learning medias, we should be attending and developing all those. Thank you, sir. Thank you very much for the insight. We like to, sir, can you please come down over there? We need to honor you. I need to call Mr. Swapun Shatra to come on the stage to honor sir. A big hand from all of you. So with this, we will be breaking for tea. So it should not be a long break because we are already running short of time. So let's break for just 5 minutes. Please wrap up very soon. Please give a round of applause to Mr. Ganesh Ram of MF Utility. He is on stage and he will be sharing his market insights, which will be actually helpful for all of us.
Yeah, good morning everyone. So chai to pee liya, thoda energy hona chahiye. Good morning. Okay, thank you. So my name is Ganesh Ram. I'm the ND CEO of MF Utilities. Prior to this, I was the business head for BSc Star MF. So it's been around 8 months I have joined MF Utilities. MF Utilities as a platform, I don't know how many you people know, but this AMFI's platform owned by all the AMCs. So whichever AMCs are spoken here are all my equity shareholders. In that way, we are part of AMFI. And because I was part of BSc, now I'm in a great position to come and talk about how this platform can help. Like Mr. Krishna spoke about from SBI, how we need to drive digital and digitization. So our platform is completely on digital. So I'll kind of first explain to you few things about MFU as a platform, why you need to use, what we need to use. Then this is Mr. Sunil Nair. He will introduce himself. Well, he will also take through MFU and also MFU Box. MFU Box is the new back office software which is inbuilt along with MFU. So you don't need to buy any third party software. That also we will present. Sunil, if you want to introduce yourself.
Yeah, hi, good evening everyone. This is Sunil Nair. I have joined MFU in the month of April. It's just 8 months. And previous to that, total 20 years experience in BFIC sector. So I have come from Reliance Mutual Fund and Reliance Securities to MFU. So that's my introduction. So I will ask Ganesh to take this forward.
Just to continue what Mr. Krishna from SBI spoke, some statistics on investors or the mutual fund industry landscape is, we have close to 2.96 crore investors, okay, and around 10 lakh folios. But if you actually compare, so which means each investor has 3 to 4 folios, okay. But if you look at the PAN, can anyone tell me how many PAN we have in India? The tax paying community, how many PANs you think we have in India? Sir, the number of PAN per month? No, sir. Sir, we have 51 crores PAN in the country. Okay. If you just compare that against the MF folios, we have one MF investor for each 21 PAN. So therefore, each 21 PAN, taxpayers, we have only one mutual fund investor. So which can able to give you the sense how much reach we need to have. We still have gone through a lot. I think we have reached now 37, 38 lakh crores. But I think the Vision 2025 or AMFI talks about 100 lakh crores, right? So that's where we need to reach. The only way to reach that is how we can adopt digital. Okay. Having said that, compared to any other platform, few things which I want to talk about mutual fund utility. As I told you, it's a non-profit company like AMFI. We are part of AMFI, right? And then we is the only platform to have both digital and physical. I spoke about digital, but still if you are using physical or if you know someone who is doing physical, instead of filling up forms of multiple AMCs, you can use MF Utilities single form and single check across all the AMCs. So you don't need to waste time and effort in writing up all the physical form. We can also co-brand that and give it to you and print it and give it to you. And we are the only platform to have both financial transaction and non-financial transaction. So like non-financial transaction means I'm talking about change in mobile number, email ID, nominee, bank change, all these things other than MF utility you need to do on a physical mode. You need to go to each AMC and do. But in MF utilities, you can do online. So for both financial transaction, non-financial transaction, we have a website, we have an app, both in Android and iOS, and we also come with MFU Box. So all this put together, there will be only a single login. So if you get single login, you can use all these things. And we are also becoming a KRA, so along with like CVL, NDML, CAMS. So MF Utility also is going to form its own KRA. So our idea is to offer today for KYC or KRA, if the existing KRA entity is charging 30, 35 rupees, we are going to charge probably 5 to 10 rupees. So that's why we are coming up. Then the other important thing about MF Utility is we are a SEBI authorized POS. So any SID or KAM of any AMC you take, POS is MFU. One of the POS is MFU, which means any transaction which comes to me, which has my timestamp, is approved. Whereas in other platforms, they need to send it to RTA, and the timestamp at RTA end only is considered. That's another huge advantage. Whereas, I know a lot of people might be using NSE and BSE. Other huge advantage compared to those platforms are our timestamp is up to the market hours. So where BSE and NSE shut down the market by 2:30 p.m. So any transaction you put after 2:30 p.m. in both NSE and BSE will go into the next day. It will not go into the same day. But in our case, it's up to 3 o'clock. So we are open till market hours. And we have multiple payment vendors. So for example, for eNACH, we have CAMSPay. For payment gateway, we have Razorpay. And we have built. So we have multiple payment aggregator, and we are the only digital platform to offer you same day NAV for UPI transactions. In fact, real time. So if you or your client has done a UPI based payment, we will give you instant credit. All other platforms give you on a T+1. And we have a 12 hours and 6 days service compared to any other platforms. And we also have a centralized compliance system, irrespective of wherever you do transaction. You might do in BSE, NSE or in AMC website. You can use our module to track all your complaints and queries at single place. And the last one is, and the huge advantage we bring on the table for AMCs is the cost. So the cost AMC incurs in paying exchange platforms, say for example BSE and NSE, is way high than they incur in MF utilities. Because now they are our shareholders. So the more transaction comes to MF utility, it's a benefit not only for you, it's a benefit for the entire industry, including the AMC. So I would strongly recommend, we have a training programs. Please attend those training programs and see the entire infrastructure is for free for you, and start using it. There is multiple features, like we have a NAV based transaction trigger also. So you can select a scheme and you can define to the system saying that if the NAV is 40, then you can tell the system if the NAV is going to go to 45, do a redemption. If the NAV is going to come down to 35, you can do a purchase. So you can tell the system and schedule it also. There is multiple features which I think Sunil will take care. But I just want to thank you for the opportunity here. It's been great to be here. It's always good to be in Calcutta and with such a brilliant crowd. So if you are looking at, if you are doing somewhere, if you are doing in exchange platform or you are doing in physical also, I think you should definitely start looking at Amphi's platform, MF Utilities, and we offer a lot of range of features for you. So thank you for the time and have a great day. Sunil.
Thank you, ICAA, to give us an opportunity to be in the stage with all this learned audience from IFA community and AMC. So as the features of MFU has been told by Mr. Ganesh, I will not take much of that. MFU previously was completely only a transactional platform. Now, from November 17th, we have added an back office module, which still is under beta testing, which will launch soon. So I want to just unveil the features what we are going to offer in that box. Box actually is a back office expert. And this actually brings a lot of convenience to the IFA and the MFD communities, as you can have a lot of slice and dice of your own data, which is actually portfolio or revenue or something. So the unique features, which is first of its kind features, is like it's a user-defined analytical. It has a user-defined analytical trends. It's a multi-dimensional transactional analytic is there, and it has revenue and profitability reports. Its data is secured. Why we are saying its data is secured? Because we are not a third-party vendor. We are the platform which is hosted by Mfu, and all the AMCs are the shareholder for us. So the data which is lying with MFU is always secured. It doesn't go out because it goes only to either to the registrar or to the AMC. It's not a third-party platform or something. So we have something like behavioral risk assessment. You have goal planning, and it's purely our in-house software. There is no third party involved in it. And it was like same it is like MF utility was. It was also our in-house software. We have scalability and flexibility in this software. You have a 360-degree view of the clientele. You can have your 360 view of the degree of clients with all types of slice and dices. Then you have a model portfolio and rebalancing, which I think in industry we are the second people who are going to offer that. And we have a flexible subscription plans, and we are not saying that give the money at one shot or something. We have something which is very flexible subscription plans. I just want to take a few seconds, I will take through how it looks and everything, look and feel of this platform. So what is in your screen is that the dashboard analytics, which is a home page, which is a pie chart. You can have AUM, assets class, or you can have a AUM by sub-asset class. You can have risk and goal setting for your clients. And this is the dashboard analyticals of yours, which will give you the gross sales, purchase, and your revenue. And this is like your, again, your transaction slice and dice, which comes, what is the income from systematic investment, what is your redemption figures, what is your AMC wise, what is your trend. Then you have detailed report. Like detailed report in the sense, if in Excel, how you do a pivot and everything, there is not required to do a pivot. We have given you a flexibility that how you want to see the report, you yourself can create the report. You don't have to depend on anyone. And you have customers' total detail analysis in front of you. And this is dashboard analyticals revenue, where whatever brokerage or revenue you got from the AMCs has been sliced and diced into asset class, sub-asset class, AMC-wise, and even brokerage type-wise. Last, not the least, this is the portfolio analytical of your AUM. Again, reporting, detailed reporting of your mutual fund transactions. So this was what was available for the box. I will not take much of your time. Just what Ganesh has told you, there is a features of Mfu platform as it is. What Ganesh has told you that we have, 1 minute. We have multi-transaction capability which no other platform has, which is there in your screen, like both financial, non-financial, only financial in this end. Account opening form, others you have to give an account opening form. Mfu generates account opening form for you. Transactional cutoff time, till market hours cutoff time, we accept the transaction. And dashboard and everything, we provide you a real dashboard. System always 99.8% uptime. We give you a complete investor holding report which no other platform gives you. Like your investors' closing units plus current value will be provided by us. And you have what Ganesh has told you, that you have trigger based on NAV indexes, you have scheduled transaction where you have top up and downsize available. You have SIP stop start facility, minimum 1 transaction to maximum the customer can stop the SIP and come back and start whenever he wants. Multi-payment assets, we have API for all the services, single stack API, and integration charges is nil. Thank you very much.
I just want is along with the Mfu box, which is only a mutual fund back office software, we are going to come up in a few months a Mfu box plus, which you can use for multi-asset. So if you have insurance, you have equity, then you have any other asset class which you are managing along with mutual fund, you can use this Mfu box plus for multi-asset. So what we are trying to do is to give one platform where you can execute the mutual fund transaction and you can manage your mutual fund back office. Along with that, the same software can also help you to track and monitor and report all your asset class. So I would request, we have a training schedule. Prashant is one of our, I think many of you know Prashant Mishra is from Kolkata. our relationship manager, so he can probably share his details. So we have a training session which is scheduled twice a week, am I right? Yeah, twice a week. Tuesday and Friday, which for basic and advanced. Please look at it, and if you really will find much value addition for you. And the way we have structured MFU or MFU Box and MFU Box Plus is to see how we can increase your business. Okay, most of the other platforms run on a commercial basis, and we are a non-profit entity like Amphi, like our parent company. So we really don't run behind commercials. We want to ensure that we give you a good software and features where your business grows and also our AEM or the industry grows. Thank you so much for having us here. Have a great day. Thank you.
Ganeshji, I can ask you on behalf of the IFA fraternity, why use MF utility, not BSc? Because you in BSc.
Good question, sir. 3, 4. Okay, from the
because,
other side.
Because you in the BSc platform, and after that you are
So,
in MFU.
Yeah,
you know the difference between what is the actual.
Absolutely. I'll tell you, sir. So that's the reason when I started, I told I was in BSc. I am in a good position to see how the exchange platforms are and MFU is. From a AMC's point of view, as I told you, I give you an example. There's a huge cost saving even for the AMC. So why we should look at AMC's cost saving? Because that impacts your TER. Okay. So the TER impact has on your commission. So it's a waterfall methodology. So for example, a top AMC which does transaction in BSc, so imagine they do some 8 lakh transaction per month. So they pay around 2.5 crores every month to BSc. Okay, this is from AMC it gives, and that doesn't go from the AMC book, it goes from the scheme book. So obviously there's an impact on TER. Okay. But the same AMC, if they do transaction in MFU for those 8 lakhs, they just need to pay me 50, 60 lakhs. So there is close to 2 crore cost saving for the AMC. Okay. And second, I am owned by AMC. All the AMCs are my equity shareholders. Okay. From a distributor point of view, okay, BSc Star MF is up for sale. I think many of you guys would have seen that. BSc is trying to make money out of it, and it's more of a commercial angle. Whatever BSc does, if there is no earning for them from AMC, they will not do. So mostly they are up for sale. And the second thing is, compared to the platform, if I would say, if BSc has 20 features and MFU has around 60 features. So the future wise it's pretty high. Okay, that's a huge advantage. So one major advantage difference I'm telling you, the financial transaction, non-financial transaction. If you are using BSc, you cannot do a non-financial transaction. You need to go to AMC or RTA, give it in paper. I myself, as an example, I have 40 plus folios. So till I joined MFU, I never know about MFU's feature. The moment I joined MFU, all the 40 folios got mapped. I was easily able to change my bank, email ID, mobile number. Else what I should do is, I have investment of around 15 AMCs. I need to go to each AMC and give it. Okay, that's a huge advantage. From the investor point of view also, we are the only platform to offer a login for your investor. BSc doesn't offer that. So imagine I am a MFD, Sunil is my client. I also can, in my own discretion, if I don't want to give, I don't need to give. I can give a login to him where he can log in and see what I am doing. And he can also initiate a transaction, but if he initiates a transaction, my ARN number will be hard coded. Okay, so here what will happen is, you need to generate a report, send it to your investor. वो पूरा झंझट नहीं है.
Yes, you can use a microphone. Please give him a microphone.
No, sir. In BSc, sir.
Which you are told that is a customer login, that is also possible in BSc
No,
platform.
sir, no.
Yes, sir, I have do it. I have already done it.
No, investor, sir. If you are a mutual BSc Star MF user,
right?
You don't have an investor login.
Yes, sir, I have already given to my client for transaction. He can transact.
No, sir. He can authorize a transaction, but he can't log in and see his portfolio performance, what all you have done, and he can't initiate a transaction on his own.
Today he cannot see his portfolio, but he can do transaction from his own login. I have already.
They can do. They can do.
Yes, sir.
Portfolio
that
they
is
can't
right.
see, but
He cannot see his he cannot see his portfolio, but he can do his transaction in his own login.
Okay, so that I was not aware. So he can do is, so I'll stand corrected. So there is an investor login available where he can see his entire holdings also. As what Sunil told, investor can able to see his portfolio. And the other huge difference is, I can give you the entire holding. So imagine if your investor has done direct or he has even done with other distributor. If he can give consent, I can take his entire investor holding and give. So from a futures point of view, there is a huge difference. And another huge difference is, in BSE and NSE, you don't have physical. Okay, so we have physical also, we have digital also. So if you or your investor wants to do in physical, you can take our form, invest, use it across AMC. So these are the few things which we feel that no, we are much superior than what BSE can offer.
Sir, I have a question. That is possible, the investor cannot see his portfolio, but if he or she is using MF Plus, that is also possible he can see his portfolio.
Yeah, if you are a subscriber to MFU Star MF Plus, which
Star
I only
MF Plus,
launched,
right,
yeah,
sir.
which I only launched,
Star
we
MF
bought
Plus.
Wealth Magic software integrated, there you can give it. I'm
Right.
talking about MFU only. I'm not, so like MFU, BSE Star MF Plus, MFU box is our product.
MFU box में एक client तार portfolio देख सकते हैं.
Yes, MFU box में दे सकते हैं, MFU में भी दे सकते हैं, दोनों में देख सकते हैं. MFU box is equivalent to MFU Star MF Plus. Sorry, BSE Star MF Plus.
BSE Star MF Plus. और which is difference between BSE Star MF Plus और MF Plus? MFU Plus जो आप अभी बताया, what is the difference?
MFU and
MFU Plus और BSE Star MF Plus.
MFU box basically.
MFU box.
2-3 things. MFU BSE Star MF Plus is a third-party product of Wealth Magic which they brought and embedded there. But MFU box is an in-house developed. So our data stays with us. Where in your case, it's actually shared the industry data with Wealth Magic. And MFU Star, BSE Star MF Plus doesn't give you a revenue and brokerage reconciliation modules like what we are given in MFU box. Here you can set up your own brokerage based on the AMC rate card, and you can see calculate the brokerage against what RTA gives. That is one option. And the second option is whatever data comes from brokerage data comes from RTA, you can auto upload in MFU box, and system will calculate and dice and give you what kind of brokerage you are getting from which location, which client gives you more brokerage, which asset class is giving, which sub asset class is giving more brokerage, which location, all those things you can see.
And there is EBIX also another platform which can we can do is another insurance.
That is insurance, sir.
Insurance.
That is insurance. So, but the MFU Box Plus, which we are going to launch probably in April next financial year, is going to have multi-asset. So, we will have insurance, we have equity. If you want any other asset class, everything will be there along with MFU.
Direct equity is possible?
Yes, sir. You need, if you have a software like Class and all, here you can integrate with this, or you can take your equity and upload this and view it. All these things will offer you in a single login.
Okay, thank you, sir.
Right, sir.
Yes, if there is any other question, please pass on the mic.
Yeah, please.
So very less third-party apps are having MFU API. Why is that?
Because MFU never went to them and asked for integration.
No,
okay?
when I talked to them, they said that they are asking MFU for a long time, but the MFU
What
is
I'm
not
saying,
allowing them.
what I'm saying, I will not blame my predecessor or anyone, but till now, MFU never went to any fintech guys and told you will integrate. Now we are working with all the fintechs. Down probably 2-3 months, you will see the major guys like InvestWell. InvestWell is already with us.
InvestWell is already there,
Invest
like
already
Wealth
with us.
Magic,
Wealth
like-
Magic is anyway sold to Finsto.
Yeah, Finsto.
FinLabs, we are integrating with FinLabs. Then Red Vision, and all this software is getting integrated
So
with
Finsto
MFU.
would be having that?
Yes, I am working with Finsto, FinLab, and all those stuff.
Thank you.
It's we are not gone up. We never went. It's like Amphi's culture only. I would say we never went to anyone and told that we have a product which you can use. Okay, now the reason I also came board and Sunil is also there, even Prashant is there. If you actually look, we never had a regional presence anywhere earlier. So now we have people in Chennai, Hyderabad, Bangalore, Ahmedabad, Bengal. We are going to have more people in Calcutta. It's only to tell people that there is a product like this. These are the features. Please start using it, and then you'll get benefited, and they will also get benefited. Thank you. Any other questions?
Sir, or one more question. Sir, which type of transaction in coming future, how we can do it? In your platform, what type of product, which type of transaction we can do?
All type of transactions.
What type of product in the sense?
Product, that means product. Which product we can transact from your platform. That means just like mutual fund, insurance, equity.
No.
Transaction platform, we are only for mutual
Transaction is only mutual fund, sir, because we are part of AMFI, it's only for mutual fund. But the software which we are giving to you, you can do your other asset class like equity, insurance, everything outside, but you can integrate our software to that. So you can have a single view. But from a transacting point of view, as we are MF utilities, part of AMFI, only MF transaction you can do.
You can offer your investor a single view of his portfolio consisting of mutual fund, equity, gold, real estate,
Insurance.
and insurance. That is what it is.
But
It doesn't have trading capabilities. We are only mutual fund platform.
Here we.
Okay, sir.
Sunil. Others.
Yeah, sorry.
So due to this new MF Central thing, they are also like bound by the AMC. So will this affect the MF?
No, MF Central is not owned by AMCs.
Like Carvey and CAMS.
Yeah, it's only owned by Carvey and CAMS, both the RTS together. But if you look at MF Central, is only for investors now. Okay,
They
it's
have announced for the distributor very soon.
Yeah, that will take an years or so. But I can assure you one thing: whatever MF Central is offering, the same thing MFU is offering. And tomorrow, if MF Central is going to offer something else, MFU also will offer the same thing. And we are also looking at how to synergize and connect with MFU and MF Central together. So there is a huge benefit for the industry that we are looking at.
So thank you so much.
Thank you, sir.
Thank you so much. Any question, please, Prashant is here.
And I am also there here for some time now. I can give my card if there is any questions or anything you need. Please welcome. I'll be much more happier.
Prashant,
I think
your
we have
number shared every...
No, we have given the brochure, backside of all the regional heads, phone number and everything is
Contact
there.
number is there.
Contact number, email ID, everything is there.
Yes.
Right,
Thank you, sir.
Thanks for
Sir, just a minute, wait.
Sure.
I request Mr. Sujan Das to come over here to honor Mr. Ganesh Ram. Request a big round of applause when he is being honored. Thank you, sir. Thank you very much for a lot of information. It was an informative session. We have learnt a lot, and we came to know that there are 51 crores of PAN holders all over India. So it was not known to us. So most of us, so we had given a wrong number. So now we can expand our business. So many PAN holders are there. So many of business should come in. So now I request Mr. Parash Matalia, Head of Equity Research, Samco Mutual Fund, to come over the stage. Sir, please. A big round of applause for sir.
Hello. Good afternoon, everyone, and I thank ICAA for giving us this opportunity. So, the flow of today's presentation would be, I'll give a short corporate profile. We are very, very soon coming with our own mutual fund, our NFO, which will begin on 17th of January and end on 31st January. So first, I'll talk about what, as an AMC, what are we going to do, what our philosophy is going to be, and then I'll talk about the product, the NFO that we are coming with. Now, our legacy runs, from 1993, it was founded by Mr. Vipul Modi. Till 2016, he was the youngest chartered accountant in India. He completed his CA at the age of 19.5. We rebranded Samruddhi based out of Mumbai, not out of Kolkata. We rebranded it to Samco and we became a fintech platform. Broadly, we have these 5 business verticals. We have our discount broking under Samco Securities, who's the sponsor of the Samco Mutual Fund. We have about 2.5 lakh customers on our platform. We have no branches across India. We have acquired all of these customers via digital marketing, Google search campaigns, and all the fintech platforms that we can use. We have about 550 employees with us at a group level, and half of that, are software engineers. So we pride ourselves to use and leverage technology as much as we can, and everywhere we can. Second, we came out with our mutual fund distribution and research platform called RankMF, where we tried to differentiate the methodology of ranking mutual funds and tried to disrupt that industry as well. We have Samco loans, where we give capital market funding and loans. We have Samco AMC, about which we'll talk today. And we have AI/ML based research and advisory platforms called Stock Basket and Kya Trade. In 2019, we got the best equity broking house award from CNBC Awaaz. That's our CEO, Mr. Jimit Modi, receiving the award from Chhattisgarh CM. The trustee board of Samco is, with people who have a very, very high pedigree. Our chairman is Mr. G.N. Vajpayee, who has been a former chairman of LIC as well as SEBI. Next is Mr. Prabhat Kumar, who has been a former cabinet secretary and the first governor of Jharkhand when the state was formed. Next is Mr. Shailesh Gedia, who is a senior chartered accountant and former director of Punjab and Sindh Bank. And Mr. Vipul Modi, who is the chairman of Samco Group, who will be a non-executive director. On the board of Samco AMC, we have again a very, very high pedigree of directors. We have Mr. Ashok Kakkar chairing the board. He is, the former ED of SEBI. He's the one who actually started the mutual fund department at SEBI. Next, we have Mr. Ishwar Nayak. He's also a very, very senior chartered accountant. Mr. Kanu Doshi is also very, very well known in the industry. He has been a former chairman of past 3 AMCs. And lastly, Mr. Jimit Modi, who is the CEO of our group. So he has over 15 years of experience in the capital markets and is a rank holder chartered accountant. And we have, Mr. Ganesh told us recently that he's been from BSc Star. We have Mr. Omkeshwar Singh. Majority of you all would know his face. He was given the title of biological father of BSc Star. So we have on board, have him on board, and he looks at the mutual fund business at Samco. We have Mr. Umesh Mehta. He's also a chartered accountant, has been with us for over 15 years, has experience of 20 years in the capital markets, and is actually a mentor to all of us at Samco when it comes to equity research. Our fund manager is Nirali Bansali. Again, a very, very rich experience of about 8 to 9 years, has very good sense of numbers and fundamentals when it comes to analyzing companies. Our registrar and transfer agent is K Fintech, and our custodian and fund account is Deutsche Bank. So, now I want to talk about, as an AMC, as a mutual fund house, what we are going to do, what our philosophy is, and how we are going to differentiate ourselves, because we are the 45th entrant in the industry. So, as the zonal head of LIC told us, that the investor awareness is shifting to investor consciousness. People in the industry, investors are very, very conscious. They know what is going on in the industry. There is a good amount of shift to passive. There is a good amount of shift to direct equity. So how we are going to add value, how we are going to be a mutual fund house where we can cater to the 21st century investor, who is a very, very conscious, risk conscious and cost conscious investor. So before any mutual fund presentation, disclaimer is must. So but obvious, this disclaimer is applicable for all the slides that are there in this presentation. So just a second. So in all manufacturing sectors, we have quality test, we have stress test. But in our mutual fund industry, we are trying to be the first one who will do a stress testing of the investor's money, the investment process. So I hope a lot of you all would have seen the ad that we have been airing since last 3-4 months. So what we are trying to say is that we'll stress test all the companies that are there listed on the exchanges, and out of that, we'll select companies. So what is a characteristic of a stress tested company? There are 2 main attributes that the company shows. First is that it is able to survive during the time of stress, during the time of duress, and it is able to become a compounding machine and grow during the time of economic expansion. Now, what is the premise behind these 2 characteristics is very, very simple. That in last, according to a McKinsey study, In 1955, the average life expectancy of companies or businesses was about 75 years. That expectancy has gone down to 15 years because of technological disruptions and the fast changing world that we are in right now. So it is very, very important now because the life of companies is short, and we have to make sure that the company will able to survive all kind of stress, all kind of economic recessions that might come. Second, why we are focusing on companies being earning machines is because what we saw is that this is a chart of 82 years. Why we have taken this period is that in 1917 you can see the price multiple is of 5.3, which was lowest, and in 1999 because of tech bubble the price multiple was highest. So you can see that in this period the S&P 500 index has given a return of about 11.3%. Out of that 11% return, only 2.3% return comes from the multiple expansion. So that amounts to only about 20% return. The 80% return that is actually generated, it comes out of earnings growth. So we as a AMC, we are trying to capture this 80% growth of earnings and actually make money out of it. So we have a proprietary Hexagon framework, which is an algorithm that we've built over the last few months. How it helps us is that that a fund manager or human being has his or her own restrictions, but a machine if it enables that fund manager to expand its bandwidth, expand its area of expertise, then it could help us. What we are trying to do is we are trying to identify risk across hundreds of scenarios. So this Hexagon framework is where we try to stress test companies across various scenarios, which I'll talk more about in the next slides. So what investing simply boils down is to that over an extended period of time, the business should be able to employ incremental cash at a high ROC. So the Hexagon framework is a six-faceted framework. It has 6 facets. What we do is, we test the reinvestment and growth stress test, where we try to find out whether the business will be, be able to, invest its own earnings at a sustainable high ROC. So few companies like Castrol Gillette would fail in this stress test because as a company they are fundamentally strong, but they don't have any more opportunities to invest their cash that they're generating and paying out all their earnings as dividends. Next is corporate governance and leadership stress test. So if all the numbers, all the fundamentals are in place, they look good, but corporate governance and structure is very, very important. So what we try to do here is we look at the composition of board. Suppose let's take an example of Vedanta. Vedanta has 12 directors on its board. Out of those 12 directors, only 6 directors are independent and 6 directors are Agarwals. So if when a resolution comes that might actually harm minority investors, then independent directors do not have power to actually go against the resolution. While if we take example of good corporate governance structures, a company like HDFC Bank or Infosys has about 11 directors on its board. Out of those 11 directors, 8 directors are independent and only 3 directors are executive directors. We also look at key man risk in this stress test, if the company is run by promoters, if the company is a CEO factory or not. So there are few very good examples in this space. We have Pidilite, we have Marico, we have Asian Paints, which has been run by professionals since many, many decades. And every time a CEO retires, someone from the ranks of the company comes to the helm of the company. Next we have is cash flow test. Everyone knows that cash flow is the king of the business. So what we try to do in this stress test is we try to suffocate the business. We try to take out cash out of the balance sheet, and then we try to see how the company is able to do if they are able to run their day-to-day operations. To give you an example, Asian Paints has a working capital cycle of 8 days. Compared to Berger has 45 days, and ExxonMobil has a working capital cycle of 102 days. So a situation like COVID, when there was, the liquidity was not rotating in the industry, what had happened is that many companies actually cut down on salaries. They were not able to pay salaries. A company like Reliance Industries, which is the largest company of India, was also not able to pay salaries for a very short period of time. While Asian Paints was such a company, it was the first company, I think, which was able to give salary hikes during the time of such crisis. Next, we have balance sheet and stress test. So basically what we do is we try to profile the assets and liabilities on the balance sheet of the company. We also look at how much levered the company is and whether that company will be able to service its debt or not. So majority of the crisis that we've seen in past 5-7 years is because of that asset liability mismatch, be it DHFL, be it India Bulls Housing Finance or Yes Bank. All of that has happened because the balance sheet was either very, very levered or the assets and liabilities profiles did not match. Next, we have the competitive strength. So at the end of the day, if a business is doing good today, how good is that good? Is that strength will be sustainable, or can be taken further with time or not? So what we try to do here is we try to increase the competition level for all the companies here. So let's take an example of TCS. So TCS has a return on capital employed of say 48%. So even after 20 levels of competitive intensity, because if the competition enters the market, the prices will go down, revenues will go down, profit margins will decrease. Even after that, TCS, will be at, in the worst case scenario, will be at a 31% ROCE, which again is a very respectable number. Next, we have regulatory stress test. So what we try to do here is we try to figure out if regulator is interfering with the company's business in any way. So there are two ways in which regulator can interfere. First is that regulator can be an enabler, by putting entry barriers, high entry barriers, companies like AMCs, insurance, or banking insurance, where new entrants find it very, very difficult to come to the market and compete. So this leads to the incumbents doing really well and actually increase their market share. So on the other end, regulator can be a restrictor, where they can curb consumption of alcohol, curb consumptions of cigarettes, and actually impact the business in a very short period of time. So we try to avoid shocks where such a scenario could happen. So we ran this Hexa Shield stress test on a universe of about 67,000 companies, 67 global companies. Out of that, only 125 companies, passes our stress test. Out of this 125 companies, about 85 names are global names and 40 companies are Indian companies. So we have a lot of companies from US, we have a lot of companies from Europe, Japan, Australia, few from China as well. So it's a truly market agnostic, geography agnostic framework which helps us to focus on what is actually worthwhile. So there are a lot of news in the markets that a lot of funds are not able to outperform the benchmark, not just in India but as well as in the US, where the markets are very, very developed. So one big reason for this happening is that many of the fund managers actually follow the index. They have 60-70% of their portfolio in index weights. So what happens is that it will mota-moti give the returns of index, and on that you charge a active TER of say 1.82%, and also all the other expenses that are charged. So it is a classic recipe for underperformance. So what we try to do, what we are trying to do is, we are trying to pioneer this space. We are going to be India's first AMC who will disclose active share on a daily basis. Now, what is active share? Active share, measures how different your portfolio is compared to the index. So suppose your portfolio is 100% different from the index, then your active share will be 100. If the portfolio is say exactly like index, then your active share will be 0. So what we are trying to do is we are trying to bring a fund in the truly active sector where our active share will be more than 80%, 90%. So you can see that there are 24 flexi-cap schemes in the market. Out of those 24 flexi-cap schemes, only 3 schemes are such which are actually truly active, and rest 21 schemes are actually index huggers or are following the closet indexing strategy. So the market cap of flexi cap funds is about 2 lakh crores. Out of that 2 lakh crores, about 1,40,000 crores is in exact proportion as the index. Only 60,000 crores is actually different from index. And on this 2 lakh crores, assuming a 2% TER, the fee that is paid by the investors is about 3,600 crores. Now, if you divide that 3,600 crores by just 60,000, the ratio is the actual expense ratio comes to about 6%. So why having an active fund or truly active fund is important is because we have given these 2 examples. A portfolio with 90% active share gets about 9.2% return from the active portfolio. While the passive portfolio, for the passive part of the portfolio, they have to only generate very small part, assuming that both of the funds want to generate 10% return. The next portfolio is where the active share is only 30%. So you can see that because the active share is really low, in the active segment, they have to generate a return of 14.7% to actually give a weighted average return of 10%. So to generate that 14.7%, the AMC or the fund managers will have to take a very, very high risk. So the promise is very simple. We want to come out with a stress-tested mutual fund, which is truly active. And we are also doing few new things that I'll talk more about going ahead. We don't want to be asset managers. We don't want to be asset gatherers. We want to be asset managers. So because of this HexaShield stress testing framework, there are very few companies that actually will invest in. So we'll never be able to come out with infra funds, no infra funds, no power sector funds, no PSUs, no thematic funds. Because even if we try to bring that funds, we'll not have enough stocks to take in the portfolio. So introducing Samco FlexiCap Fund, our NFO starts 17 Jan and ends on 31st Jan. It will be a simple 25 stock portfolio. 16 names will be domestic names and 9 names will be global names. So our goal is not to chase point-to-point returns. Our goal is not to generate the highest return. Our goal is to generate highest risk-adjusted return. We are not looking at companies where we have to time the markets. We are trying to invest in companies which are in a continuum, which says that if an investor invests today and invest at any given point of time on a 3-year rolling return basis, they should come out with a positive return. So it's a very simple 3-step strategy. We call it as an E3 strategy. The first step is basically we try to find and invest in stress-tested efficient companies. Second is we try to invest in those companies at an efficient price. And third is we want to maintain an efficient churn. So I'll briefly talk about what companies are stress-tested efficient companies. Now, stress-tested efficient companies, what we try to find is those companies where the return on capital, adjusted return on capital is very, very high. How do we adjust the ROC is basically we add back discretionary marketing, R&D expenses, which actually are creating assets for the new age businesses, but are penalized in the P&L. So if you see, if let's take an example of cement plant. If someone is putting a new plant, they don't have to expense it out in the P&L. They are actually creating an asset on the balance sheet. While if a software company is creating software, the cost to build that software is basically employee's salary, which is expensed out to P&L and is not. It's actually the company might optically look in losses, but is actually creating assets which will help the company generate profits in coming time. So whenever we talk about an asset or an investment, we look at one key metric. For example, if we look at real estate investments, we look at rental yield. When we look at bonds, we look at YTM. So the key metric for equities is adjusted ROC. And there is a quote by Charlie Munger which says that in the long run, keeping the price aside, in the long run, the investor is expected to get return more or less equal to the ROC of the company. So what that type of stress-tested companies we are trying to figure out are, it should have high sustainable ROC. The profits that are earned should be in cash. The ROC should be adjusted for the discretionary marketing, R&D expenses. And again, it should be sustainable for a long period of time. So I've given a look-through matrix here. Our benchmark is Nifty 500. We have compared stress-tested universe of India with the benchmark. You can see that return on capital employed for stress-tested universe is almost 2.5 times higher than the benchmark. The gross margin is almost 44% for stress-tested universe compared to 28.8. How do we understand is this? Suppose a company is selling a product for 100 rupees and making it for 72 rupees, which is our benchmark companies, while a company B is selling a product at 100 but making it for just 56 rupees. Now, which kind of company will you like to be invested in? A company which has a higher gross margin or a lower gross margin? Next, our companies are virtually debt free. They have 0.03 long-term debt to equity ratio. A working capital cycle is much efficient and smaller than the benchmark, and our reinvestment rate is very high compared to the benchmark. So let's understand the drivers of what kind of companies we have. What we are looking at is we are trying to find out B2C companies where a company like Novo Nordisk, if someone in your family or your known circle is diabetic, then that they need insulin pens regularly. So out of every 2 insulin pens sold across the globe, one insulin pen is supplied by Novo Nordisk. It has a market share of 51% in this sector. A company like Facebook or Meta, which has habituated its users to, use it on a daily basis. On an average, a lot of people of young age, spend about 6 or 7 hours a day on Instagram and Facebook. A company like Dr. Lalpath Labs, if you have to take a COVID test, if you have to take a health checkup, you have to take a health checkup. You cannot defer it. Next, we are trying to, look at businesses which are price setters and not price takers. So the best example here is Asian Paints. You all must have heard very recently Asian Paints hiked its prices by 17%, and the industry followed. A company like Microsoft, if you want to subscribe to or buy Microsoft Office, you have to buy it at list price. You can't, delay that purchase. You can't ask for, discounts. So one very important factor that we are looking at is a very, very large reinvestment opportunity. A company like NVIDIA, it's one of the top 10 companies in the world. It is in AI/ML industry, and it's also pioneering in the omniverse or metaverse of the worlds. A company like Intuit, it's services to MSMEs for accounting softwares and back office softwares. It also recently acquired MailChimp, which is again a tool for digital marketing for small companies. Next, the most important attribute of the company should be an intangible asset, which gives us competitive strength, which can be sustained for a very, very long period of time. The best example here is Alphabet, Google. Whenever we are looking for information on the web, the first name that pops to our head is Google. So suppose a business is in manufacturing steel. It has a steel plant of say 1,000 crores. The competitor can come to the industry and say, I'll invest 2,000 crores. And on those 2,000 crores, they might also get a loan from the bank for 1,500 crores. But suppose, someone gives you a check of $500 billion or say even $1 trillion, it is very, very difficult to replicate the algorithms and the learnings of Google or Alphabet that they've created. Same, a lot of intangible assets is basically a proprietary or an IP, or it could be a very, very vast and irreplaceable distribution network like HUL or Costco. So we talked about efficient companies, but it is very important, to discuss what kind of companies will never ever form part of our business. We'll never have PSU companies. We'll never have cyclical companies. We'll never have capital intensive businesses. We'll never fall in the trap of investment fads, and we will never ever invest in companies that are very, very highly levered. Why? The reason is very simple. It is called the rule of 50-80. What this rule says is that for these kind of companies, it is the probability of them falling by 80% has a 50% probability, and the company falling by 50% has a 80% probability. Now let's take an example of Tata Steel. You can easily say कि it goes from 200 to 1000, comes back to 400, say again 1000, comes back to 400. So we are not interested in those kind of businesses, where timing the markets are very important. We want to be in businesses, which are in a continuum, which gradually goes up. So this is a comparative, back-tested portfolio of the 15 stocks of Nifty 50 that pass our stress test framework, and compared to Nifty 50. So you can see that the difference is very huge. But you might argue that this is point-to-point return, and it looks optically good on point-to-point return. So we also have, presented here monthly rolling returns as well. So what, as an AMC, we are trying to say is that we don't want to outperform all the times. We know that we will underperform few times. So what we are trying to do here is that we want to outperform 2/3 of the time. And when we outperform, we want to outperform with a higher number. But when we underperform, we want to underperform with a lower number. We can understand this by taking an example of cricket, net run rate. So if suppose I am batting, I have to score more runs, and if I am bowling, then I have to give less runs. So this is called positive expectancy model. Outperform 66% of the times by about 3.72%, and underperform by about 2%. And net, we are trying to outperform by 1.5% on a monthly rolling basis. So there are two types of businesses in the world. One are those where their ROC or their growth is subject to law of mean reversion, and the other ones are those where their growth or ROC is not subject to the law of mean reversion. Now, what do I mean by this is that suppose an industry is doing really well, its ROC is very high, the company is earning a lot of profits, so it will attract a lot of competition from the industry, and because of competition the margins will go down, the company will not do as well as it was doing. While because of few intangible assets, few companies are such, where this phenomenon is not applicable. So let's take an example of a beverage company called Coca-Cola. It has one of the highest brand values in the world when it comes to FMCG companies. So there was a study where it was found that a group of subjects were given Coca-Cola and Pepsi. So when they were told what the product they were drinking, they preferred Pepsi. They told Pepsi was a better tasting product when they were blindfolded. And when they were told that the drink that you are drinking is Coca-Cola and this drink that you are drinking is Pepsi, then they preferred Coca-Cola because of its brand value and the way over the years they have integrated their brand with good moments or happy moments. So step one is very clear. We are trying to invest in stress-tested, efficient companies. Step two is that because we are investing in quality companies, we are investing in stress-tested companies, we are going to get those companies at a little bit premium. We are not someone who will try to buy companies at a low PE and try to sell them at a high PE. What we are trying to do is that we are trying to buy these companies at a very, very efficient price. So again, quoting Charlie Munger, suppose he's given an example of a company that earns a ROC of 6% over 40 years, then the investor cannot, expect his return to be very, very different from 6% over a period of 40 years, irrespective of the price, even if he's able to invest it at a very, very low price. So we've tried to do this on an Excel sheet. We have compared two companies, company A and company B. Company A is earning ROC of 20%, and even though when you are buying the company, the price to book multiple is 4 times, and when you are trying to exit the company, the price to book multiple has compressed and gone down to 2. Even then, your CAGR would be about 18%. Compared to a company B where the ROC is low, even though you are able to buy it at a low PE multiple or low PB multiple, and you are trying to sell these companies at a high PB multiple, the CAGR is just 12%. So you can verify this information by doing a very simple exercise in Excel. So as I told you earlier, our goal is to participate in continuum and not actually be in point-to-point businesses. So all the companies that will form part of our portfolio will more or less have such kind of charts where the company is gradually, slowly and steadily going up over a period of time. So how do we value our companies? We value our companies using adjusted free cash flow. We adjust this free cash flow for, again, discretionary marketing, R&D expenses and branding expenses. So, as I told you that because we are investing in quality companies, efficient companies, the valuation that we'll be looking at, it would be a little bit higher than the index. So you can see here is that the Nifty 500 cash flow yield is 2.38%, while stress-tested universe of India has a cash flow yield is 2.07%. So a 16% premium over the benchmark companies, which is okay for us to pay. But what we are trying to say is that we don't want to invest in companies where the cash flow yield is very, very, very low and the premium compared to benchmark is very high. To give an example, D-Mart is a very, very good business, but if you calculate its cash flow yield, it comes to only about 0.5%. So compared to index, the premium is very high. So because of that, we'll not be investing in such company. So summarizing, we are investing in stress-tested, efficient companies. We are investing in those companies at an efficient price. So there is no need to change the portfolio on a very, very regular basis. So, our turnover ratio is going to be very low. We also have one product similar called Stock Basket. Majority of the portfolios on that platform has a 0% churn rate over over 2 years since we have launched. So our philosophy is very simple. You buy quality stocks, you buy them at a efficient price, and you keep the churn efficient. Why we want to keep the churn efficient is because when there is a lot of turnover in the fund, the expense ratio goes higher. The expense ratio is the part where investor is visible to the investor, but the impact cost, the turnover cost is not visible. It directly goes out from the NAV. So what we are saying is that there are 2 types of costs the investor has to bear, TER and voluntary dealing cost. There are many funds, where the turnover ratio is very high, 100%, 200%. So we, as a mutual fund house, we are investing for the long run. So for us, it does not make sense to have such a high turnover. Now, because of that turnover, on an average, the cost of buying and selling is about 50 bips. And if the turnover is very high, the voluntary dealing cost goes up a lot. So suppose a fund A has a TR of 1.7% and that fund is churning a lot, then the voluntary dealing cost will be 1.2% and the total cost applicable to the investor will be very, very high. So we are trying to be in the fund B category, where even though the TR is say 1.8%, our voluntary dealing cost will be very, very low, negligibly zero, and because of that the investors will have a lower expense. So our portfolio construction is very simple: 25 stock portfolio, 16 Indian names and 9 global names. Our SID is going to be the simplest in the industry. It is only 48 pages. You must all know that SIDs run up to 150, 200 pages. Now why is that? Because we are only talking about 3 asset classes. We are talking about Indian equities, we are talking about foreign equities, and TREPs. Will not do hedging, will not have derivatives, will not have cash calls. The cash levels also will be very, very less. So all of that goes out of the picture and SID becomes very simple. So why 25 stocks? According to portfolio theory and a good book, where every investment or every stock has 2 kinds of risk: unsystematic risk and systematic risk. So when we construct our portfolio, we try to reduce the unsystematic risk, which is stock specific risk. So after including 25 stocks in a portfolio, when you introduce 26 stock, the unsystematic risk doesn't go down. It becomes virtually zero at the 25th stock. So we want to be in that sweet spot where we are not over diversified and we are not under diversified as well. In summary, with Samco FlexiCap Fund, you will get the best 25 stress tested companies. We promise to be a truly active fund. We'll have 65% Indian names and 35% global names, and we are going to be a pure equity fund. We will be invested all the times, and we want to be part of the continuum, as I talked earlier. So our weighting framework broadly is top 5 names will have 7%, next 10 names will have 4%, and next 10 names will have 2.5%. So everyone talks about what kind of companies they'll buy in, when they'll buy in, but we have all the policies, all the framework already set. So what we are saying that our exits are also predetermined. We'll only exit a portfolio company in 4 scenarios. The first one is that we do this stress test on a daily basis. Our algorithm runs on every day. So suppose there is a company in our portfolio which passes the stress test but subsequently fails the stress test, then that company will go out of the portfolio irrespective of its weight. Second, if we find a much more compelling opportunity than there are in the fund, so the 25th, the weakest name will go out and that strong name will be included. Third is, we are going to let our winners ride. So if the companies hit a ceiling of 10%, then we'll have to partially sell those companies as well. And fourth, where the valuation becomes indefensible, we have an indicator for this as well, where the price multiples or the valuations are exorbitantly high, and institutional investors are exiting the company and retail investors are coming in. To give an example, recently that has happened in IRCTC, where a lot of institutional investors are reducing their stake and retail investors are actually investing with very, very high numbers. So what we are going to do is, we are going to be the first AMC to disclose active share on a daily basis. Second, what we are going to do is, we are trying to take the investor engagement to the next level. In today's time, what investor gets is just one number, that is NAV. If the NAV goes up, investor is happy. If the NAV goes down, investor is not happy. So what we are trying to do here is that, we'll treat the FlexiCap fund as a consolidated company, a holding company which has 25 stocks in it. And every quarter after the companies declare the results, will also consolidate those results and publish it for our investors. What we'll also do is that on an investor level, suppose an investor has 5 lakh rupees invested in our fund, we'll also give them an attribution of their own money in these 25 companies. So how this will help is that if the NAV is going up and the fundamentals are also going up, then you can tell your investors, see, even though the NAV has gone up very high, but the fundamentals are also high, so you don't need to worry. On the other hand, if the NAV is going down, you can tell your customers that the fundamentals are still there, still intact. You don't need to sell your investments, you don't need to redeem. If you have more money, it's a very good time to put more money in the fund. So what we are also going to do is, like every listed company in India, we are also going to do an investor conference call with the investment committee every quarter after the results are declared. Our governance structure is such that investment committee, it's chaired by our Jimit Modi, who is our CEO. Umesh Mehta is the CEO of Samco AMC, Nirali Bansali, myself, I'm the head of equity research, and there are 2 more people who will form part of this committee. So my humble request to you all is that, we need your support for NFO. It's beginning on 17 January and ending on 31st January. We have leveraged technology in such a way that we have very interesting commercials. So if you empanel with us, you'll be able to send those commercials in a co-branded manner. So you can send those commercials to your investors, and at the end of those commercials, your logo and your contact details will be there. So again, we are trying to disrupt the mutual fund industry with a lot of new features, and at the end of the day, we want to create wealth for our investors and also create a win-win situation with the distributor fraternity. So our local team is here, Pranab Das is here, Saptarshi is here, and Pawan is here. So if you have any queries, or you are stuck somewhere, then you can take their help. We have their numbers as well. The empanelment process is very simple. It does not take more than 3 minutes. And for individuals, it is, it's very, very simple. It happens within 3 minutes. So the empanelment is very simple. You just have to visit www.samcomf.com and you put your ARN numbers, and a lot of information will be fetched from Mfu, and a very easy process. So again, thank you for your time. Hope I was able to add some value to your time today. Would I be able to commercials for NFO? You'll find those very interesting. You'll find those on the lines of the presentation that I've given today.
Thank you, sir, for the insight that you have given us. So I need to call Mr. Gautam Karmakar, the chairperson of ICAA, to honor Mr. Paras. Sir, if you could stand.
एक efficient company. मैं हूँ एक
4-5 साल में ready.
इन्वेस्टमेंट्स में ऐसी इनएफिशिएंट कंपनी से दूर रहें जहां फाइलें बस घूमती रह जाएं। सैमको फ्लेक्सी कैप फंड आपके लिए पैसे बनाए दुनिया की बेहतरीन स्ट्रेस टेस्टेड एफिशिएंट कंपनीज में इन्वेस्ट करके। इन्वेस्ट करने के लिए अपने फाइनेंशियल एडवाइजर से संपर्क करें या विजिट करें samcomf.com।
Mutual fund investments are subject to market risk. Read all scheme related documents.
मैं हूं एक एफिशिएंट कंपनी।
मैं हूँ एक इनएफिशिएंट कंपनी।
ये भाई साहब कौन है?
दरअसल मैंने इनसे काफी बड़ा लोन लिया है, तो सब कुछ इनसे पूछ के करना पड़ता है। आपके यहाँ ऐसा कोई?
No, we are debt free. इन्वेस्टमेंट्स में ऐसी लोन से दबी कंपनियों से दूर रहें। सैमको फ्लेक्सी कैप फंड आपके लिए पैसे बनाए दुनिया की बेहतरीन स्ट्रेस टेस्टेड एफिशिएंट कंपनीज में इन्वेस्ट करके। इन्वेस्ट करने के लिए अपने फाइनेंशियल एडवाइजर से संपर्क करें या विजिट करें samcomf.com।
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.